Well, Happy New Year, everyone. Buffett and Beyond Research brings you the Saturday market recap letter, and this is the last day, well, almost the last day of 2023, and getting on into the new year. And remember, if you want to live on the beach like Jimmy Buffett once did, then you've got to learn how to invest even better than Warren Buffett does now. And this week, wow, what a run into the end of the year. Can you believe it? The Dow just kept making new highs for the past 2 weeks. Unbelievable. And the NASDAQ rally way more than made up for last year's losses. With 2024 expected to see 3 interest rate cuts by the Fed and also being a presidential election year where everybody spends money, we see a pretty decent follow-through for the market. And our weekly stock analysis video this week, ServiceNow. Now, this is a stock most people have not ever heard of, and it's a big company, got about 20,000 people working for them. Has great revenues, and all they have to do is bring it to the bottom line. And folks, this market really thinks this company is off and running. It had an 80% return for 2023. And the question is, will this stock repeat its great performance in 2024? Well, we're going to take a look, and we're going to take a look at those revenues that are coming in nice and steady, and we like nice and steady. So does the market. Our ETF video, well, our 12 top stock picks in the QQQs were up 99.5% for 2023. Folks, we have never had 100% return in any portfolio that we've made up, and boy oh boy, we were really hoping for that 100% level, but we'll take 99.5%. Now, that was 12 stocks in the QQQs that we developed, so we take the best top stocks in ETFs and the best ETFs, and those are the stocks we buy, because when you're talking about ETFs or any index is made up of both above average stocks and below average stocks. So why in the world, if you are able to pick out the top stocks or the above average stocks, which we are able to do, and our 22-year track record shows that, so if you're able to pick out the top stocks and not buy the bottom stocks or the below average stocks, then folks, that's the way to do it. And that's what we did with the QQQs. 12 stocks in there, up 99.5% for 2023. We're not going to see those kind of returns for a long time to come, folks, and I'm glad they were in our portfolio. All right, let's get on with the market. Here's the S&P 500, and you can see up here this market has been up to that top band and above it. That's a strong market in there. And then it fell down and is trying to regain, but we think our indicators are starting to roll over, and we're going to see a couple in just a second, and maybe we'll come back down to that 20-day moving average right in the middle. Now, remember, these red lines, the top and bottom lines, are volatility bands, and the stock market stays within those volatility bands about 99% of the time. So we've seen a beautiful run right into the end of this year, and the market was down a little bit on Friday, and that's we're going to look at the volume in a second, because everybody went home and they started their vacation, their 3-day weekend. They started early. So we're going to see if this market can maintain or roll over a little bit and just take a little bit of rest going into January. And our intermediate term indicator down here is flat as flat can be, so it's not giving us a sell signal in here yet. We need some down days, but well, let's take a look. And when we look at the S&P 500, you see this very short-term indicator up here. This is a sell signal, and we have this very short-term indicator saying we're going to have a little downside action. Now, when we come down here to the intermediate term indicator, you can see a little closer, it looks like it wants to cross down below that red line. That would be an intermediate term sell signal. We don't have it yet, and we're not too sure about the action this week, because look at this volume. These vertical lines represent volume, and the gray lines represent the volume on an up day when the market closes up. And again, this is the S&P 500, and you can see how the volume just drifted off. Started before Christmas and went through this past week. And so we can see that, hey, everybody just went home, and a few folks sold at the end of the day and drove the market down just a little bit. It had been down almost all day, and that meant people just wanted to get out of there and get home from work and start the 3-day weekend early. So it would be almost a 4-day weekend. So you can see they are not there at work, folks. And when we look at the XXD, and that is the semiconductor ETF that we watch, and we can see that same pattern up here, this little sell signal up here. And what we see all the way down here is that we see more of a defined turn to the downside. Now, once again, this black line has to cross this red line decisively, because look what happened over here. It was almost giving us a sell signal in here, and it just couldn't do it. We took on some hedges here, and for those portfolios that are being hedged, and you can see right up here, this semiconductor ETF was playing right around its 200-day moving average, and then all of a sudden took off like a rocket. Wow. And so a good way to end the year. But we're a little hesitant in here, and we're going to talk more about this in a second. And for those of you who want portfolio protection on all the time using puts, and we buy puts about 10, 15, 12 to 15% below the market, and they're there just in case we have some kind of disastrous effect in the market or a short-term serious pullback or something like that. But anyway, it lets you sleep at night, and it hasn't been very, very expensive at all because the market has been going up. Now, when we look at our short-term indicators, we can see that the short-term indicators turned down on the Dow, on the S&P, and on the QQQs, and the intermediate term indicators are rolling over, but they haven't rolled over yet. So we're going to see what happens in this first week of January coming up here in 3 or 4 days. And the hedge timing we set out an alert for those of you who want to hedge intermittently. We said, okay, we'll put some hedges on. Now, the thing is that when we put hedges on, we go short the ETF, but we stay long the individual stocks, the best stocks in those ETFs. And so therefore, even if we're wrong on the market keeps going up, our individual stocks go up more than the short ETF, which is our hedge, goes down. So we still make money even though we're wrong on putting on hedges. Now, those of you who are always hedged, well, if you were in the 12 stocks that we talked about in the QQQs that were up 99.5%, if you were hedged in that portfolio all the time, you still would have been up 45%, which is twice as much as the S&P, and being hedged. And when we talk about being hedged, we have some pretty good hedges in there, folks. Either they're the inverse ETFs or we just go short the ETF itself, but we stay long the good stocks. So this portfolio right here with the QQQs and the tech ETFs and the semiconductor ETFs were all up in the 40% range, folks, with the hedges on. So that's very, very good. We had a very, very good year. So, folks, 2023 is over. We made up more than we lost in 2022 because 2022 was just a down year unless you were totally out of the market, and some of the portfolios were. In 2021, toward December, you said, okay, time to get out, and you were totally correct in that. So we're looking for 2024. This is what it looks like, winter down in Florida, and that water is warm, folks. So yeah, sit in one of these chairs, just watch the ocean, take it easy, and if you're not in Florida, still go out for a walk, be with your loved ones, watch TV, do whatever you want. 3-day weekend coming up, a new year starting, and folks, we wish you a very, very happy new year, and we'll see you back here on Tuesday.